Now, right now, people think of NFTs as art or some sort of community thing, and both are amazing uses. I wanted to try and give you my thoughts in depth about NFTs. You see, NFTs are something that really taken my attention in the last year as I've started to understand the power of what they are and what they can do. You know, we've got the protocol layer, which is the layer ones, the Bitcoin, the Ethereums, the Solanas, the Polygons, and all of these others. And they're amazing. And they facilitate the technology for the transfer of value for the internet at large and for the new digital age. And it's an incredibly important technology, not only for money, but of all digital value and digital scarcity. You see, in a digital world, you can produce infinite amounts of something, infinite amounts of JPEGs, infinite amounts of information. So how do you create scarcity in a digital world? Well, that's what blockchains do. They create the ability to have scarcity in a digital world and therefore have value. So humans value things based on scarcity. And so you need that. If not, nothing in a digital world has any value at all. Okay, so that's what blockchains did. But the big breakthrough was Vitalik's breakthrough with Ethereum, which was the smart contract. And the smart contract is what created NFTs. So let me talk you through a bit of this. Now, what is a smart contract? What is an NFT? It's in fact a smart contract stored on a blockchain. We all know that, but if you actually thought what it means, well, there's three component parts to all of this. Firstly, the contract. You see, in human society, every single agreement, in the broadest sense, is a contract, be it written, implied, or verbal, from religious vows to airline tickets, from meeting a friend for a rum, or using Twitter. Contracts are literally the base layer of society that build on trust. You see, human societies can't function without these contractual terms about how we interact and what we do. They are contracts. And as I said, some of these are verbal and some of them are explicit, like your insurance contract or a contract to buy a share. Those are all contracts. The other point of this is stored on a blockchain, that element. You see, all contracts need to have some record. Some of them may be handshakes. That's you and I agreeing to something. Or it may be a nod, approval, or in the City of London, it used to be my word is my bond, which is if I agree to something, it is sacrosanct that we have done that deal. But you can also include rooms of lawyers, databases, all other ways of storing a contract. Or you can do it on a blockchain. Now, what a blockchain does is it allows these contracts to be settled, disputed or agreed, and allows it to be recorded. You see, the blockchain allows for the verification by a distributed ledger of any contract. So therefore, you get around the Byzantine generals problem of not knowing who agreed what with whom. This way, everybody agrees what's in the contract. Okay, so that has abilities to scale, and we'll come on to that in a bit. But it's a really, really important thing that now all contracts can be written in code and agreed that this contract exists and for everybody to see that it exists and the terms of that contract. Now, what's interesting about the smart contract element of an NFT is the fact that it kind of allows for the settlement mechanism to be automated in code and resolves without the need for a third party. So you don't need the courts, the lawyers, the notaries, the accountants, or anybody. So that's the really interesting element here. You have a contract and it can settle automatically and it's verifiable by everybody. Okay, it sounds kind of a bit boring because it doesn't really mean a lot. It's also decentralized, and this is one of the key elements. Now, most of you understand the elements of decentralization is having this immutable database with all of this information stored, which is verified by millions or hundreds of millions of people. That's the power of blockchain. So nobody can change the terms or conditions. And God knows how many times we've all had to fight over something where somebody agreed something And then when you come to get paid or whatever the outcome, it doesn't happen. So that's the element of smart contracts. Now, right now, people think of NFTs as art or some sort of community thing, and both are amazing uses. Now, for example, in the background, I have my NFTs displayed. And NFTs are super interesting because they fulfill so many different elements of what makes Web3 Web3. Firstly, we saw, I think it was in my conversations with RAC, the award-winning music artist, he kind of taught me the power of community and how NFTs could be used for music. But then within Real Vision, we started talking to artists like Mad Dog Jones and Micah Johnson. And they were doing two different things. Mad Dog Jones was creating digital art and making it scarce. So places like DeviantArt have a community of 70 million people plus creating digital art and enjoying it, but there was no way of selling it because you couldn't create scarcity. But with a blockchain, you can make it a one of one. It's kind of like a limited edition print or a unique painting where you own it. Now, yes, you can have the image of it. You can have the image of the Mona Lisa. You don't own the Mona Lisa. In fact, more people have the image of it, the more valuable the actual original is, which is something a lot of people don't get their heads around. So artists are always innovators, and they took to the space. They started realizing that digital art was something that was a new form of art and that they could experiment with it. And along came a revolution in art. And it started with people like Beeple, incredibly putting together 5,000 pieces of digital work over a number of years, and then that being sold as one NFT in itself. And they were different NFTs, and that sold for 69 million. That took the art world by surprise, and Sotheby's and Christie's have both been involved in this, as they've realised that this is a new form of art. Art has always broken boundaries, whether it was the Impressionist painters, the postmodernists, the expressionists, everybody has reinvented what art means. Photography reinvented what art means. How can a photograph be scarce? Well, it is if you create the limited edition print of it. And, you know, we've had on Real Vision unbelievable artists as well. Alpha Centauri Kid, incredible. You know, Xcopy is one of my favourites. I think his glitch art is just exquisite and so kind of fresh and modern. It's kind of like the Banksy of the digital world. They all have generally some meaning too. I mean, I collect Beeple as well, and Beeple's work is, well, not at 69 million, but there's cheaper works to be had. His work is really amazing because it's about that day's news and something that is relevant culturally, and then it's immutably put on the blockchain in his shock manner. And now his art is shocking and incredible. That's my Xcopy now, which is one of the least rare, but I still love it. So we've got these artists experimenting and doing amazing stuff, and some of this stuff is immensely valuable. You know, people like Fuck Render, Alpha Centauri Kid, ACK, Beeple, some of their art trades for the millions, and well deserved. There's others who have kind of fallen into it, like a good friend of mine, OSF, Ovi. Ovi created one-of-one art, sort of in the style of Xcopy, and it really took off as well, and then created the Rec Guy community. And that brings me into the other side of what happened. What happened in NFTs was it started with CryptoKitties, and we've interviewed the founders of CryptoKitties in the past on Real Vision, and Bill Ty, who was an investor in it, and how important CryptoKitties were in this movement, because it started to create digital assets for a game that could be transferred or owned. Okay, that doesn't happen. Anything you own in Minecraft or whatever, you don't actually own in the outside world, it's only within that game, so it's a closed shop. But blockchain changes that. CryptoPunks was a project that was pretty worthless, that was done several years ago. And eventually in 2020, people started thinking, well, these were the OGs in the space. 10,000 of these pixelated punks, and I am one of those too. And people started thinking, well, if I want to show that I've been around this space and understand the space, I want to own one. And that's where status comes in. Same as we all do. You know, we buy artwork, not only for our own appreciation, but for status. We buy watches, nice watches, because we like the watches and because they socially signal something about us. The clothes that we wear, what we do, our houses, our cars, everything. humans are ridiculous and we love to socially signal stuff. Even when we are wealthy and we drive an old Volvo like the old chairman of IKEA, beaten up 20-year-old car, he's signaling something himself. Everybody signals. It's a human trait that is very common. So that works digitally as well as it does physically. We all wear designer labels often because they signal something, and we do the same in the internet. And the PFP became the important part of that movement. So CryptoPunks became the PFP that people would show that they could afford to spend the money on it, but also that they understood the space and where it was going. Then on the scene came Bored Ape Yacht Club, and this was a whole new thing, because what they did, Yuga Labs, was they realized that you could do a lot more with it. That this could be the genesis to a whole media thing or a gaming thing, something really, really different. And so the Bored Ape Yacht Club took off, and its value is now often higher than CryptoPunks. Why is that? Well, CryptoPunks are a little bit like Bitcoin. There's less applications built on them. In fact, there's none. There's just the punk itself. And that's the status symbol and the signaling that comes with it, a part of history. But Bored Ape Yacht Club also created history, but it did something different. It said you kind of are going to get future rights to other things that we do as we grow out this project. What that means, we don't know yet. And that created the thing of the roadmap, where you got drop benefits by being part of the community. So whether it was the Mutant Apes, or whether it's the Bored Ape Kennel Club, or the token, the ape token, or it's the other side deeds to their metaverse experience, or the sewer pass, all of these things actually trade for huge value. And actually, the accumulation of value for the original Bored Ape Yacht Club holders, had you held on to it, is one of the largest accumulations in corporate history. And it is a corporate, and it's your kind of stake in their network. And this is the network effects and the network state ideas that I want to talk to you about as well. I want to also talk about ETH as an economy. This network state idea I've been thinking about in my head. And ETH to me is the closest approximation for the network economy. You see, when you look at the Ethereum economy itself, you have the economic activity, which is the on-chain activity of Ethereum itself. It generates fees, it does a whole bunch of other stuff. But then as part of that, it breaks down to subcomponents. So there is a public sector, central bank style bond market, which is the yield curve, which is coming from ETH staking yields. And as ETH moves towards kind of flexible staking yields with this Shanghai merge, it means we should have a yield curve out to 1 year for sure, and maybe longer. So that looks very much like a traditional economy where you've got a cost of capital over a shorter period of time. You've got yield that generates interest income that gets reinvested in the economy. So that's very interesting. Then we've also got a private sector lending market, which is DeFi. So much like the traditional economy, like the US economy, it has DeFi and other kind of lending areas make up the banking sector. So that's kind of interesting, and that's still pretty nascent. So my guess is as a percentage of GDP, and I'm going to do some work on ETH GDP and how to think of it as an economy. I'm just thinking through it. But as a percentage of GDP, the financial sector is very small still in the Ethereum economy and should grow over time, because in every single market, the financial economy is usually grows faster than the actual economy itself, particularly in this phase, i.e. the early phase of an economy. It also has, I think, an equity layer. And the equity layer I'm thinking of is like the layer 2. So these are like companies. So you could think of Polygon as like Google. So it works within, like Google does within the US economy or the global economy, generates revenues that are different to the underlying economy but add to it. And that's what these layer 2s do. So I think they're like the equity layer, the companies that sit on top. And I understand they're protocols and not companies, etc. But I think that's how I'm thinking about it. And same with the applications, other applications layers as well, that these are like companies being built on top of the network, which is what they are, which creates network value, but it also is what creates economic value. So if you think of the United States, it has all of the companies that make up part of its economy that creates the GDP, the government sector being one part of it, but the private sector being the huge part, and that's the driver of GDP growth. And so I think that the ETH economy is remarkably similar. But that got me thinking about, how do NFTs fit in? And I'm going to go back and tell you a story because I think it's really interesting, something you really need to understand about NFTs. So back in 2012-13, I was living in Spain and I'd gone through the European crisis after the financial crisis. And the euro was still pretty highly valued, but had topped out. It was kind of the 140-ish, something around that level. And I had a structural view that the dollar was going to be stronger and the euro weaker because of the debt issues in the Eurozone. And so I took a very brave, ridiculous move, much like I did in crypto several years later, is I switched 100% of all of my liquid net worth into dollars. And I was living in Spain. I was earning in euros. So then I actually changed the billing for Global Macro Investor into dollars. So I changed my base currency. I then thought, okay, what do I do with these dollars? So I bought some bonds and I then bought some assets. So I'd done the same with Ethereum, I realized. So I wanted to invest in the Ethereum economy, so I bought Ethereum. I bought some bonds. I get some staking yields. As you know, I'm not really big into the DeFi space overall, but staking yields, I don't mind some of that. And then I started allocating my ETH to NFTs. In the US side of the equation, when I did that trade originally, what I did was bought property. So I bought property in the Cayman Islands. I built that house in Little Cayman, and that was a way of parking dollars in a productive asset and stopping me trading them, because you know what it's like, you get spooked out by markets. And that worked out pretty well. You know, my guess is the value of the property, I don't know what it's gone up, call it 50%. And the dollar went up about 30% against the euro. So overall, you kind of get the leverage of the trade without leverage. Now, NFTs are the same. So I think the current type of NFTs, which is kind of scarce assets like art and some of the community stuff like punks and apes and stuff, these act like the art market traditionally, where people invest because it's all based in dollars. So they park dollars into art. It's a way of keeping hold of dollars and keeping out of bank accounts, that kind of stuff. In this situation, NFTs, it's a way of owning property in the ETH economy. So I've got property or art, whatever you want to think about it, but a property in that sense. And that property is priced in ETH. Now, this is the remarkable thing about Ethereum, is actually the internet, the Web3 internet, uses ETH as its base currency. Not Bitcoin, it's ETH. ETH is what they price mainly NFTs in. Obviously, there's some in Solana, there's some in Tezos and everything else, but ETH is the main bulk of it. So these things are priced in ETH. So they can move around, but the main driver of it is the actual value of ETH itself. Because if something's worth 1 ETH and ETH's at $1,500, and they're still at 1 ETH, and ETH's at $3,000, you've doubled your money. And you haven't got rid of your ETH bet. Okay, this is really interesting. So I started allocating, I don't know, maybe 10% of my ETH or so into premium NFTs. And some of those are communities, some of those are art projects. Because I saw that the stuff like punks, when you look at the price of CryptoPunks and Bored Apes, is they've remained incredibly stable in ETH terms. Yes, they had a blow off top, and then they came back, and they've traded at about 65 ETH forever. And that's interesting to me, because they didn't fall much further. They had a sharp spike in June in the big crypto collapse, but other than that, they just rallied back and stayed at 65 ETH. So whatever ETH does, they're just mirroring it.